Hello, good evening, everybody. Today is Saturday, the 13th of May 2023, and this is Dr. Simplicity. I've come back to give an update on the outcome of trade 001, the very first trade in this series of recording. If you haven't seen our first two videos, I'll encourage you to have a look at them. It will explain what it is all about. We're on a mission to determine whether forex trading, spread bet, futures trading works. We intend to take a number of trades over the next 12 months. Based around the non-farm news, that is released in the US every first or second Friday of each month. Just a quick recap. The summary of the very first trade that we put up, trade 001, is up on the screen. In the top left-hand corner, there is a summary of that trade. The starting capital, let's get my pencil on. So the starting capital was $10,000 pounds. Again, please remember, it's all pretense, dummy account. And the trade zone, that is a trade zone. The risk, total risk for the trade is 49984. And the profit target we're hoping to make is 74976, and the risk to reward ratio is 1.5. That, in essence, is the summary of that trade that we put up. I think it was on the 7th of May, if I'm correct, after the non-farm news was released on the 5th of May. Great. Let's clear all the drawings. Great. So that's a summary, and it's all there on the screen for you to see. This is a target line. This is the entry line, and below here, the red broken line is the stop line. Okay, and we're hoping for markets to track down into the buy zone there, and hopefully track upwards to profit. If it doesn't do that, we expect it to continue southwards and then take the trade out for a loss. Great. So that's it. The brief summary of that trade. But before we continue, before I forget, I should let you know about the disclaimer. So I'm going to put that up on the screen in a moment. Here is the disclaimer. We'll spend some time to read it. It's all pretense account, and it's just my personal memoir over the next 12 months, to see if trading does work. The bottom line there, the very last sentence, says all this presentation is published as a personal exercise and should not be relied upon for purposes of trading the markets. It's as simple as that. Okay, going back to the analysis now, it's 13th of May, like I said. It's been a few days since that trade was set up. And what we're going to do now is we're going to move the chart forward to see what happens. I want to do this slowly for you so you can appreciate every moment of it. So I'm just going to move that chart forward very, very slowly for you to see. So here we are in the second day after the trade. The market was still tracking nicely above there. Okay. Quite take that off. And as we advance the chart, we move into the second day, the 9th of May, and into the 10th of May, market was just playing up above the target line there, as you can see. And then we come to the 11th. And there we go. We have a fill. We have a fill there. On the 11th of May was when the trade was filled right here. Okay. And immediately the market puts us under pressure. You can see there that as soon as the orders were triggered, or the order was triggered, the market just continued towards our stop line. Okay, let's see what happens after that. Then went even lower, nearly taking the trade out. Oops, I just lost my connection here. Well, let's hope that comes back. I've just saw that happens sometimes when I'm recording. Lose the connection. Turned off there. Just wait one moment until my Wi-Fi connection comes back. Let's see if we can move the advanced. Yeah, okay. I think I'm back online. So the market was just hovering around our stop line. We were saved by that few points of wiggle space that we call it, you know, below the entry zone. So the market was hovering there, pulls up there, pulls down again. And I think it does that a few times into the next day. Then what happens? Begins to pull out. We thought, okay, we are going to be lucky. All right, it begins to pull out here. But then, bing, it pulls back into the zone and below to our stop line. So we got stopped out. Got stopped out of that trade. It's as simple as that. Okay, we got stopped out. Right. Let's clear this. Right, so that's where we got stopped out. And that happened on the 12th of May. After it had triggered on the 11th of May, you know, played around, did as it was going to go away. Then bang, 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 and we got stopped out there, which is okay. So what's the outcome? The outcome is very simple. It's there on the screen for you to see. The order triggered and trade failed. We have a loss of 499.84. We've recorded that. I'll show you that. I'll show that in a moment. And now our available trading capital has been diminished by that amount. And we now have roughly 9,500 pounds to trade with. Remember, this is all pretense account, all right, as we are on a mission. But what is the lesson for each trade? You know, there is some lesson to be learned, at least one lesson to be learned. What can we learn from this one? So we got triggered for a loss there, all right? And for the novice trader, the temptation is to say, hang on, when the market was tracking back at this point, from there it was going into profit and then begins to track down. And below that point again, a novice trader will say, hang on, what if I move my stop line? That is a red line. What if I move that so I don't get stopped out? You know, you go into panic mode and then you move it down. Say, let me copy that for a moment. Copy that and you move it down, say below to that point, right? And then you say, well, maybe I'm going to be lucky. I'm going to advance. Let's see what happens now. If I advance the chart a little bit, then we see that it's going even lower than that. Am I going to be taken out? So again, the novice trader would say, let's move that stop line a bit further away. Maybe I'm going to get lucky, right? Might get lucky and not get stopped out. And so then move it to some point like that. And and hope for the best. You do that hoping for the best, that the market will turn in your favor and not take you out, and hopefully pull into profit. So what happens if you do that? Bing, 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 and bang, market does move lower and lower still. And what then happens, if a trader has been doing that, is that you are taking a far bigger loss than you intended to do before. All right. So the lesson there is that never, ever move your stop line. You will have determined before you enter the trade that the trade is going to be taken out at a certain point. You are happy with the loss. That is the cost of doing business, as they call it. All right. So never ever move that stop line. All right. I'm ready to take the loss. We are ready to take the loss. There's all pretense account. Remember that. So and that has happened now, and we are very comfortable with that. So the question that we will often ask is, did this trade fail? Yes, it did. But the right question to ask is, did I follow my plan? Of course I did. I followed my plan. I did say I was ready to lose 49984 if it didn't go my way. And it didn't go my way on this occasion. And I am happy to take that loss. And so that is the outcome. And so we're going to record that, or we have recorded that on our performance sheet, our trade record sheet. I like putting that in red, so it's obvious to me when I come to analyze after 12 months to see the sequence of trades, of the wins and the losses. Hopefully, we will see a pattern, show up at some stage. And remember that quote that I in that first video. There'll be losses, there'll be wins, and there'll be a period of nothing, no win, nothing, no loss, no win, no loss. And there is no particular sequence or order in which this will happen. You never know. Yes, we wish our very first trade will have been successful, but on this occasion it hasn't. And so we have lost a 49984, and therefore our outstanding capital is roughly 9,500 for us to do the next trade. Okay, and we moved our stop loss, like I was showing the other time, we will be showing far less than 9,500, probably 9,000, probably 8,000 something. Okay, we don't want to do that, and we're happy to take that loss, and that is it. And until the next trade, we just have to wait. Until the next trade, one has to have that discipline, to wait for that. How do I know when the next trade is happening? Well, usually, I hope you can see this. What's on the screen now? It's called the Forex Factory. That's where I pick up my data for what is happening next, when the next news is going to be released, the next non-farm news. My own is all configured to show me just US news, significant news. Today is the 13th. As you can see on the screen, there is nothing is happening. It's a Saturday. Yesterday, the 12th, for instance. Yeah, there was some significant news there, but I don't bother about that. So this is May. If I want to see when next news on the non-farm is going to be, I just advance that to next month. That's June. It's showing June now, and usually it's the first Friday. So here is Friday the 2nd. Let's see when it's going to happen that day. Good. There we go. So on that Friday, June the 2nd, we're expecting the next non-farm news, and that's when I hope to bring the next video. Shortly after the news, hopefully, maybe the weekend, I will be bringing the next trade opportunity on and recording that. Otherwise, that is the end of the video. Trade 001, the very first trade. We have taken a loss, which we are happy to do. And we just have to wait and wait for the next trading opportunity. And this again is where novice traders may feel they get impatient and want to fight the market to make some money by all means. And this is when things often go wrong. Okay, there it is. Until then, I hope to be releasing the next video for the next trade, hopefully sometime in June, first week of June, God willing. Until then, it's bye for now from Dr. Simplicity. Have a fantastic weekend. Bye.